This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. To the charts. I only have a few. One, this is interesting. You're going to be hearing about this tomorrow, I would assume. Late today, Buffett and his Berkshire Hathaway released their latest 13F filing. It's a quarterly filing of all their holdings and the changes to those holdings. It was the filing that was reviewed and released back in the middle of August where we first found out, oh my gosh, Buffett bought Barrick. Can you believe it? This is so exciting. And I was excited by it too because I thought, well, this is at least kind of a sea change. Might be a green light to some institutions. Buffett's buying Barrick. Well, guess what? He's already begun to sell it. Hey, thanks for playing, you old greaseball. Buffett sold about 40% of his Barrick already. He'd accumulated 21 million shares and he dumped 12 million of them in just the last 90 days. I just picture this conversation where Buffett himself, the old greaseball, is just sitting in his rocking chair up in Omaha, doesn't even realize, that some junior trader somewhere in Berkshire Hathaway bought some because, they read this site and realize, sound money and all that stuff. And then Buffett reads the news. What do you mean? I don't own any gold. Yes, sir. Smithers' response. Yes, sir. Says right here. You bought 21 million shares of Barrick Gold. The hell I do? You're going to sell that shit beginning tomorrow. Well, we probably don't want to sell it all at once, sir. That's true. So, sell, a couple 100,000 shares a day and just slowly get rid of that crap. I don't want any of that stuff. It's a relic. Can't you see how that might have gone? So anyway, I suspect he'll be down to 4 million shares by February. And now silver, on the other hand, I keep telling you, looks okay and continues to look okay. In fact, you could have its own pennant that it finally broke out of with the blue line. How about that? That starts when price broke out through 20 back in the middle of July. So now, if silver were to get hit as well, heading into the December expirations over the next 5 or 6 days, where would we find support? Let's watch for support where the blue line and the red line intersect. I don't think we're seeing 22. I don't even think we'd see 23, but we could see 23.50. We could. And that, I bought a call last week for about $1,900 and I sold it for $1,600 last Friday because I was like, oh, I can see where this is going. That was a good idea. Well, that gives me some cash. If I see silver at $23.50 sometime in the next 3 or 4 days, I will be deploying that cash. You know what's coming. You know that option expiration is in 6 days. You know that the December contracts go off the board in 9 days. And so you know what's happening. It's the same old garbage that we've seen I've been monitoring now for a decade. Banks just simply trying to shake out as many contracts as possible to dissuade people from either standing or fully rolling. Again, as we discussed yesterday. And when you can clearly see a sweet spot on the option open interest, somewhere around 1875-ish. You don't want to take it down too far because then all of a sudden you start putting a bunch of puts into the money too, right? So there's a balancing act there. And the sweet spot is clearly between 1875 and 1900, probably closer to 1875. When you keep that in mind, that there's 4 trading days to go, and you see what happened to price today, even though the bond market, the TIP, and the PIG were all flat, you begin to understand what's going on. And I've got on this page an updated chart of silver over the last 4 days with the 50-day moving average drawn onto it. Why? Ask yourself. In a manipulated market, we know is manipulated, know with 100% certainty that it continues, why would the banks try to be holding price below the 50-day moving average? Because when it moves above the 50-day moving average, the algos, if you want to just think of it in its most basic sense, the algos have a switch flipped to where they buy the dip rather than sell the rally. Well, if you're a bank that's heavily short and interested in managing your risk, at least in options expiration day and into the month of December and beyond, you want the algos to be switched to sell the rally and help you out. And so therefore, as you can plainly see on the chart that I'll show you in a minute, every single time price has approached or gotten through the 50-day, and this is just the chart I have here is just the last 4 days, we've been immediately slammed backward. And you can plainly see the manipulation here. Okay? Again, going back to Friday, at that point, the 50-day moving average was 24.83. Now the 50-day moving average is 24.69. That's why I've drawn this as a downward sloping red line. And you can see on Friday in the rally, look at how we were capped Friday all day long, right? Then on Sunday night, away we go. Nice rally, even got above the 50-day. So we broke out of this cap line of the 50-day and rolled all the way up in, 20 minutes from 24.80 to 25.10. And then rolled over. And then with the Moderna news, got smashed back down. And then all through the day yesterday, even with the dollar down and bonds rallying, look how we were kept within tight range of that 50-day. Anytime they could smash it back down, they would. And then today, twice. Earlier this morning, and then again about 9 or 10 o'clock, got up to 50-day and immediately reversed back down. Clear, obvious bank intent to cap price. Keep it contained, at least into option expiration, if not a contract expiration next week. All right, now I want you to look at two charts together. Maybe you got to click them and open them up. My point in showing you these and encouraging you to look at them side by side, maybe you even have to print them off, is for you to understand how almost identical they are. What do you see? Well, you see the price exceeding my year-end target last year in early September, this year in early August. Then we get into a consolidation phase. We come down, big break, come down, try to hold the 50-day moving average and hold the initial support level. Last year, that was at 14.90. This year is at 19.20. Then we break down, fall below the 50-day to a new support level. Last year, we fell $30 to that new support level, about 2%. This year, we fell $60, or about 3%, to the new support level. Then look what finally happened last year. We finally moved up, broke the trend line, and broke the 50-day. It was exactly where we were 2 weeks ago today. Breaking above the trend line and breaking above the 50-day. The difference between this year and last year is COVID and then that vaccine news. That's why, what a timely event that was last Monday. So now here we are still banging around. My point is, look how similar this is to last year, okay? Give me some time here. Let's see where we are a month from now. Notice it was last year, the last 6 or 7 trading days of the year. Dollar really broke down. Up we went. What if we wait all the way until the 6 or 7 days of this year? Dollar breaks down again, whatever. We get through the 50-day. We finish the year 1920, 1940, 1950. Yeah, it'll look pretty good. All right, so anyway, those two charts, I thought you'd find that helpful. And as we go to wrap up the week here on Friday, November the 20th, it's important to note that in the sell-off yesterday, COMEX silver did in fact appear to hold those support levels that we discussed back on Tuesday. And now what's interesting is you begin to see a pattern in silver. Off of the lows back in late September, we've now made a higher high and 2 higher lows. Maybe we have the start of a new trend. We'll have to watch that next week. Also next week will be the expiration of the December COMEX options, and also the December COMEX contracts will go off the board into delivery. So we're going to have to watch that and how that impacts price next week as well as we wrap up November and turn the corner into December. More information can, of course, be found at tfmetalsreport.com. We encourage you to check us out and consider a subscription as we move into 2021 and will almost certainly be a very important and consequential year for the precious metals. A monthly subscription is just $15. That's about 50 cents per day, and I think you'll find there's a lot of value for that 50 cents a day. So again, please check us out at tfmetalsreport.com.